All right, so the Monday rate update is coming to you from Capri in Italy, this beautiful little island. You can see right behind me is the beach below the villa I'm staying at. And where are we at with rates to begin the week? Well, it's a big week. We are at between 6.2 and 6.3 for conventional, and we're right at 6% for VA. We dropped below a little bit at the beginning of last week, end of the week, right at or just above 6%. So, what will we see this week? Well, there's a lot of news. Most of it is coming middle to the end of the week. So let's break this down a little more. And how about some more? Look at that. Look at the sky. That is so beautiful. And this is this is an incredible view, isn't it? I'm sorry, I'm getting distracted here. Anyway, let's get into the market update. All right, so on Monday we're going to get New York Empire Manufacturing Index report, really showing the strength of manufacturing in the U.S. Tuesday, we get retail sales. Retail sales is definitely going to move the needle. If retail sales have slowed down, that will be good for rates. If retail sales have picked up, because people are spending their money that they don't have, clearly, then we will see interest rates probably go up on Tuesday. Then Wednesday, we get some housing reports. We get the housing starts, building permits. And we get, from Wednesday on, we get a lot of different countries. They're going to make their Fed fund equivalent decision on rate. Wednesday, we got Bank of Canada. Thursday, we have Bank of England. And then Friday, we have Bank of Japan. But Wednesday really is the big news. And that is when the Fed makes their interest rate decision. And we know they're going to lower the Fed funds rate. We just don't know how much. Is it going to be a 25 basis point drop or a 50 basis point drop? That's one of the big things that's going to impact. I think if it's a 50 point drop, in the Fed funds rate, then we're going to see interest rates go down. That'll be good. 25 is what's expected, so no real movement there. But really, what's going to impact the market is what Fed Chair Powell says after the meeting. When he does his economic projections from the Federal Open Market Committee, basically him and the Fed governors, that's going to really move the needle when he gets in front of the cameras and starts talking about what they project. Are they going to make, do they expect to make 1-2 more cuts during the remaining year? Just 2 more meetings before the end of the year. Thursday, we got initial jobless claims and continuing jobless claims. And then Friday, again, the Bank of Japan makes their Fed decision. So here's kind of what is on my mind right now. Are we going to see deja vu? Last year, September, the Fed dropped the Fed funds rate by 50 basis points. And then interest rates shot back up. They shot back up into the high 6s and over 7% again for conventional. So will that happen again this year? Well, I think a lot of it is going to be determined on, one, what the Fed Chair says on Wednesday, but also where do we see the economic reports coming after that? 2 weeks later, we'll have the PCE, the Personal Consumption Expenditure Report. So will we see inflation peak or go back up again? If we see inflation go back up again, guess what? Interest rates are going to go up. And then the labor market. Right now, the labor market is driving much of the Fed's decision to go ahead and lower the Fed funds rate. Last week, we saw a 900,000 job revision to last year's number, which is huge, the largest number ever recorded out the Bureau of Labor Statistics. All right, as far as we can tell, the labor market is not in a good position. So what will we see with the next jobs report? If we see increasing jobs numbers, if we see unemployment go down, well, guess what? Interest rates are going to go up. But if we see continued stagnation in the labor market, expect to see interest rates go down. And so, the other thing with last year, when the Fed lowered the Fed funds rate, they were kind of expecting us to go into a recession. That recession didn't happen for sure. Will we see that this year? I don't think there's an expectation of a recession, but there is certainly a concern with the labor market. I think the labor market is going to drive really the movement of interest rates as we get through September, October, and ultimately end the year. That's what we got this week. A lot going on. Stay tuned. I will report a couple times while I'm out here in Italy. Be moving around a little bit, but I really wanted to share this, and I hope you guys had a great weekend. We'll talk to you later. Aloha.